The economy is flying blind, and so is the Fed. With a government shutdown freezing data flow, today's ADP jobs report is the only candle in the cave. If the labor market is weakening, well, we're one bad print away from outright panic. Well, isn't the US just full of surprises? Hold on, relax. I'm not going to break my rule about politics. You know how it goes. Policy, not politics. That's the rule. Yes, there were some interesting developments from yesterday's election, but until there are actual policies on paper, everyone just needs to calm down a little bit. But if you were elected last night, put down your champagne and close your Leadership for Dummies book and pay attention, dummies. Companies are no longer afraid to lay off workers. I repeat, companies are no longer afraid to lay off workers. Got that? Well, you see, hiring during and after the pandemic was like a nightmare. Companies threw money at anyone who could fog a mirror just to keep the lights on. HR departments were handing out signing bonuses like Halloween candy. And that spike in wages, fed right into inflation. If you don't believe me, go back and read A.W. Phillips' seminal 1958 paper on unemployment and wage growth, the foundation of the Phillips curve. Low unemployment means higher wages, which means higher cost, which means higher prices. That little chain reaction is what turned your grocery bill into a monthly horror show. But that party, it's over. Companies have regained the upper hand, and they're using it. Work from home, once the golden child of the pandemic, has been quietly walked back. First 5 days, then 3, now maybe 1 or 2 if you're even lucky. This isn't about health, it's about control and productivity. It's about reasserting who's in charge. And here's the cold hard truth. When companies face pressure on earnings, the easiest lever to pull is labor. If you're not pulling your weight, you're out. The honeymoon is over for useless, underperforming workers. My friends, the axe is back. Look at the data. Even if it's stale, unemployment was 4.3% as of August and trending higher. That's before the government shutdown froze the Bureau of Labor Statistics releases. And non-farm payrolls, well, they've been sliding, with August showing just 22,000 new jobs. That's a dangerously low number for an economy that's supposedly resilient. Remember how hiring cycles work. Companies don't go from hiring to firing overnight. They slow hiring first, then they freeze, then they cut. We are now possibly in stage 3. History tells us that when hiring slows, a recession is not far off. The charts make it clear. Check it out. Every dip in hiring precedes an economic downturn. So why does this even matter? Well, because the labor market is the glue that's holding the economy together. When it weakens, consumption weakens, and 70% of GDP is consumption. As I like to say, confident consumers consume, but only if they're employed. And that's the crux of today's story. The labor market is slowing and we're flying blind. The government shutdown has cut off our main data pipelines. No BLS reports, no weekly jobless claims, nothing, nada, zilch. We're left with private data like ADP and ISM and anecdotal clues from corporate layoffs. And the anecdotes, well, they're piling up. UPS, Target, Amazon, Meta, even government agencies are laying off staff. The survey data from ISM tells us the same story. Employers are nervous, new orders are weak, costs are rising, and companies are holding off on hiring. The only real-time indicator left is ADP, and this morning's report is a big deal. ADP has printed 2 straight months of job losses. Economists expect just 30,000 new jobs in October, and the number, it came in slightly higher than that, right around 47K. Still pretty low compared to a year ago. Now, ADP is not the BLS. They don't always match, but the trend lines usually do. And right now, the trend is decisively down. Once that curve starts to turn lower, it rarely reverses without help from policymakers. And those policymakers, well, they're kind of flying a little blind right now. The Fed loves to say it's data dependent. Great, except there is no data. Powell and company are relying on the same private sources as you and me. Try steering a $26 trillion economy with half your dashboard blacked out. It's insane. That's why Fed messaging has been all over the place. One week it's rate cuts are on the table, and the next week it's rate cuts are premature. That isn't strategy, it's paralysis. Meanwhile, the bond market, is writing its own story. Long-term yields are rising again, reflecting fears that the Fed will wait too long and cut too late. Remember, prior to this year, the yield curve was inverted longer than at any point since the early 1980s. That has never ended well. The longer the Fed delays, the harder the landing. History is unmistakable, my friends. Every modern recession has been preceded by labor softening first, then policy response, unfortunately, second. And here's the part everyone misses. When the data disappears, the markets panic. It starts to trade on rumors, on private survey noise, on sentiment. It's chaos disguised as analysis. Everyone's trying to read tea leaves instead of reading data. The irony is that the government shutdown that was supposed to save taxpayer money is costing the country far more in uncertainty. Investors, policymakers, businesses, all waiting on scraps. The longer the blackout lasts, the wider the gap between perception and reality. So yes, today's ADP number really matters. It's the only pulse check we have. It's a candle in the cave. And even though it's imperfect, it's all we've got. But don't lose sight of the human element here. A slowing labor market isn't just a line on a chart. It's real people, real jobs, real income, and real fear. It's families cutting back, consumers pausing, and investors second guessing. And this is what policy is supposed to protect against: stability, confidence, security. Instead, we have policymakers fumbling for a flashlight in the dark. So yes, America just broke another record, the longest government shutdown in history. Congratulations. Now, let's hope we don't add longest period without labor data to that list, because if we do, markets won't be as patient as politicians. So your truth bomb for today is this: when the data goes dark, the fear takes over. Join me every day for Wall Street Truth Bombs, where I drop them here before the market figures them out. Thanks for checking in with Wall Street Truth Bombs. Remember, we drop them here before the market figures them out.